Okay, we worked a problem where we completed the operating budget components of the master budget. Now we're going to do a problem where we prepare the cash budget. And the cash budget is the budget where you look at all the inflows, the cash inflows, and the cash outflows for the period. And you would complete that before you do your budgeted financial statements. So the problem that we're going to do is problem 22-40A. It's on page 1197 of your textbook. Again, these numbers may be a little fuzzy on your screen, so you should look at the problem in your book. It may be easier to follow along if you have your book open. The company has provided the following budget information for the first quarter of 2016. They tell us total sales, our direct material purchases, direct labor purchases, budgeted manufacturing overhead costs, and budgeted selling and administrative expenses. All of this information would be from those operating budgets. So we don't have to compare. We don't have to actually prepare those in this problem. They're giving us the information from those. And then it tells us additional information. We're going to have capital expenditures for some equipment, and then cash receipts are 75% of sales in the first quarter of the sale, or in the quarter of the sale, and 25% in the quarter following the sale. Direct material purchases are paid 50% in the quarter purchased and 50% in the next quarter. Direct labor, manufacturing overhead, and selling and administrative costs are all paid in the quarter incurred. Income tax expense is projected to be $50,000 and is paid in the quarter incurred. They expect to have adequate cash funds, so they do not anticipate any short-term borrowing. And then it tells us the beginning balance in cash was $40,000. We had accounts receivable of $16,700 and accounts payable of $15,200. So we're going to use all that information to prepare the cash budget. Before we prepare the cash budget, we're going to have to prepare a schedule of cash receipts. That's going to be a detailed listing of all the cash coming into the business, cash collections from customers. They want us to do cash receipts from customers. And then we would do a schedule also for cash payments, all the cash going out. So let's start with our schedule of cash receipts from customers. We're going to need to know our total sales. We have sales of our projected sales volume is $208,000. Tells us that we collect cash receipts at 75% of sales in the quarter of the sales. So this would be our sales for this quarter, for the first quarter of 2016. So we anticipate to collect 75% of that number in cash. The rest will be collected in the following period. So the rest would be considered accounts receivable. So let's do this in first quarter sales. We're going to collect 75% of 208 and 8,000. And that gives us 156,000. We're only using 75%, so we only expect to get 75% of our sales actually collected in cash this period. And this schedule is only looking at cash coming in. The total sales amount would appear on the income statement, not on the cash budget. Okay. Now, and then the rest, 25% of this number would be our accounts receivable on our projected balance sheet. But let's see. We had when we started out this period, we had accounts receivable of $16,700. So we would also have collected that. So that's going to be those are sales prior to this period, but that are collected in this period. So collections of accounts receivable. 16,700. And that's our total budgeted cash receipts from customers, or you can just say, we're going to add those two amounts up, 172,700, and we're going to use that number when we prepare our cash budget, this number. You could go back and read and make sure there's no other cash receipts, but everything else will be cash payments, I think. There's no more cash receipts. Cash coming in. All right, so now we're ready to do our schedule of cash payments. If I like to go in the order that they list these items, that way you don't miss anything. So the first thing they list is capital expenditures will be $37,000 for new equipment to be purchased and paid for in the first quarter. So since we're paying for it now, we have cash going out of $37,000. So we're going to list that as our cash payment. You're going to say capital expenditure. Cash receipts, we did that in the schedule of cash receipts. Now, direct materials purchases are paid 50% in the quarter purchased and 50% in the next quarter. Direct materials purchases. So how many direct materials do we plan to buy this quarter? Well, we plan to purchase $40,150 worth of materials. We're going to pay 50% of those out in cash this quarter, and the rest will be accounts payable that we pay next quarter. So that will be a cash payment. Oh, excuse me. Okay, let's see. Direct materials. Bring this down so it's all on the same page. You can say first quarter purchases, and we're only going to do 50% of the amount we're purchasing, because that's how much we're going to pay in cash. And that number was 40,000. Let's go back up here and look. 40,150. 40,150. So half of that is 20,875. And the rest of those purchases, we planned to buy 40,000 and something, but we're only going to pay out in cash for half of those. So the rest will be paid for in the next quarter, and that's going to be called accounts payable. But we also started this period with accounts payable of $15,200. So that's for things that we bought last year, but we haven't paid for them yet. So we would pay for those in the first quarter of this year. So we're going to have accounts payable. That's going to be a cash outflow because we're going to pay that in cash now. All right, so that's finished direct materials. And that is most likely, it doesn't tell us for sure that accounts payable is for direct materials, but it's most likely for direct materials because our direct labor, manufacturing overhead, and selling and administrative costs are all paid for in the quarter that we incur those. So the only thing that we're paying for the only thing that we're purchasing that we're not paying for in the same quarter is direct materials. That's why I put that accounts payable with the direct materials. Now we can do direct labor, manufacturing overhead, and selling administrative cost. All those are in this chart. So we're going to list, so direct material or payment, cash payment for direct material will be our total budgeted direct labor cost, because it says we pay all of that in the quarter that we incur it. Or manufacturing overhead, these will also be, however, keep in mind that this is a schedule of cash payments. So we're only looking at things that we're actually paying cash for. Depreciation is an expense, but it's not a cash payment. The cash actually went out for depreciation. The cash actually went out when we purchased that asset. The depreciation is just where we're amortizing the cost of that asset and recording it as an expense on our income statement. But the cash went out when we bought it. So it's not going to show up, that depreciation is not going to show up on our cash budget at all. So for manufacturing overhead, we're just going to use this $1,119 plus the payments that we're going to have for insurance and property taxes. So the top number and the bottom number, not the depreciation number. And selling and administrative expenses, we pay for these in the same quarter that we incur them. So if it's got cash actually going out, we're going to list it in our cash payment schedule. So salaries, rent, insurance, those all have cash payments. And supplies expense, but not depreciation. Not depreciation, for the same reason that I said earlier about depreciation. So let's list those in our cash payment schedule. Direct labor. $37,300. Manufacturing overhead, and you can list these out individually. Variable, it doesn't tell us exactly what the variable is, but $1,119. And insurance, property taxes, $6,833. So let's get a total here. $7,982. We should have probably did that with our, I'm going to go back and total up our direct materials. Manufacturing overhead. Now we need to list our selling and administrative expenses. Okay. You can list those out like I did the manufacturing overhead. Salaries, expense, $6,000. Rent expense, $1,500. Insurance expense, $1,700. Supplies expense, not depreciation expense, because we don't actually have cash going out for depreciation. $10,400, and we can total these up, and that will be our total selling and administrative expense payments, which are $19,600. And that, I think that about gets us. So we've got our capital expenditure payment recorded. We've got our direct materials cash payments recorded, direct labor, manufacturing, overhead, and selling and administrative expenses. Now we're to income tax expense for the first quarter is projected to be $50,000, and it's paid for in the quarter incurred. So since it's paid in cash this quarter, we're going to record that as a cash payment. Income income tax payment, 50,000. And then it tells us that we expect to have adequate cash funds and do not anticipate borrowing anything. We would need to know that for the cash when we get to the cash budget. Right, and I think we've finished all of our cash payments. Now we just need to total these numbers up to get a total cash payments. That's going to be $187,127 if you add all of these numbers up. So this gives a lot more detail than our cash budget is going to do, because we have all of our selling and administrative expenses listed and our manufacturing overhead expenses listed. And we're just going to have one line for each of these on our cash budget. Let's do the cash budget now. You're going to start with a company name, what budget we're doing, and what period. First quarter 2016. Whoops. And we're going to start, your cash budget is going to start with your beginning cash balance. So our beginning cash amount for 2016 would be the ending amount of cash we had for 2015. And Part G tells you that ending cash was for 2015 was 40,000. So that's going to be our beginning cash amount. Then we're going to increase this amount by our cash receipts from the first schedule that we prepared, and that is 172,700. That gives us our total amount of cash available this quarter, and that is 212,700. Now we're going to subtract out our cash payments. And we have direct materials, 35,275. We have direct labor payments of 37,300. Manufacturing overhead payments of 7,952. Keep in mind that this is only the cash payments. Selling and administrative expense payments, 19,600. Then we have our income taxes and our capital expenditures. Total cash payments, if you add those amounts up, it should be the same amount that's on your cash payment schedule, 87,127. The schedule just gives you more detail about how you totaled each of these up. And now, if we subtract our cash available minus our cash payments, we're going to get our ending cash balance. $25,573. And that number is a positive number, so that means that we are able to finance our own operations for this quarter. We didn't have a shortfall, so we don't have to borrow from the bank to make up that difference. We had enough cash on our own to cover all of our expenses, so we could finance our own operations. And that is the cash budget.